Are you eyeing that perfect commercial property for your expanding venture? Securing the right commercial loan can be the gateway to your business's growth and success. Hello and welcome, Australian business owners and entrepreneurs. In this video series, we're unlocking the 5 keys to securing a commercial loan for business owners in Australia. We'll journey through each crucial step from assessing your business's financial health to finalizing the deal with confidence. So grab your notepad and let's get started on transforming your commercial property goals into a reality. First off, we dive into the importance of assessing your business health. Before your eyes start glazing over, this is not something you do. This should be guided by your mortgage broker. Let them do the heavy lifting. It's not just about your financial statements. Lenders want to see a healthy business model. They want to see consistent cash flow and a solid plan for the future. This isn't just a numbers game either. It's about painting a picture of a successful business or one that's poised for success. Remember, a healthy business attracts opportunities, including favorable loan terms, which we're going to touch on later on in the video. Commercial loans in Australia, it's a realm filled with various loan types, lender policies, product offerings, and regulatory considerations. If I can take a step back here and talk about structure first, this is a really important part of the process and it needs to be done up front with your accountant. You may also need to consult with a financial planner and a solicitor. For the purpose of this video, we'll keep it simple. Go and see your accountant to discuss the best structure. The accountant is a crucial stakeholder to any business, especially when it comes to buying commercial property. If you do not have a good relationship with your accountant, then this can often mean you're paying big time in many different areas of your business. Feel free to get in contact if you want some help finding a good accountant, and we'll tee you up. The structure is important because it could be a factor in the lender deciding to approve the loan or decline it. Now, your mortgage broker will be comparing lenders from banks to non-traditional financiers to find out who your perfect match is. What's best for your business needs? Is it lower rates or maybe it's more flexibility? We'll dissect terms, conditions, and the fine print so you can navigate this landscape with confidence. One more important thing, depending on what your needs are, depends on how we search for a solution. For example, if your particular needs fit a particular niche, let's say you want to purchase 10 acres of industrial vacant land, then there may be other mortgage brokers out there that are better suited to doing this loan. Sometimes the search requires your mortgage broker leveraging their network and collaborating to get you the best solution. I'm going to go over 2 important factors when it comes to terms. The first one is the loan term. Most of your major lenders are going to offer you a 15-year loan term on a standard commercial property. However, there are lenders out there that will go up to 30 years with a 5-year interest-only period. In the game of business, cash is king, and a longer loan term will greatly increase your cash flow by keeping money in your pocket. The second important term is the covenants. Covenants may be added into your loan contract in many different ways. One important one is where the lender can review your financial documents to assess if your business is still performing well enough to service the debt based on their parameters. I'm talking after the loan's approved, maybe after 1 year, depends on the covenant, maybe after 5 years. This is a massive one that people easily miss, but it can put you in a world of pain later on if you cannot provide what the lender wants and they call in the loan. Okay, now that you've got a brief understanding, I'll quickly go over what you need to do. Number 1, go to your mortgage broker. They start understanding where you are currently and advise you of what you need to do to apply for a loan. Sometimes this takes quite a bit of time and is not straightforward, which is why the mortgage broker is step number 1. If you need help with mortgage broking, give the team here at Will Bell Mortgage Broker a call to get started. Step number 2 is let your accountant know what you're doing. They'll advise you on if there's a specific way you should be doing this and setting it up. Number 3, if you own a business, you're probably busy. I suggest you pay a buyer advocate that obviously does commercial properties to take care of everything for you. Number 4, also you're going to need to have your solicitor for the conveyancing and your building inspector to obviously inspect the building. I'm a big fan of advocating for business people, putting good people around them. And in the context of purchasing a commercial property, this is no different. If you need help teeing up any of these professionals, you can contact us and we'll put you onto the right people. Guys, please subscribe to the channel for more content on commercial loans. If you need help with a commercial loan, my details are below in the content. Cheers.